Hey guys, it's Vic from Grasping the Market and welcome to our market briefing. Well, the week ended with a huge move to the downside, but funny enough, we didn't take last week's low, and you need to consider that last week's volatility and the range was massive. So, funny enough, we had a plus 2% drop, but we still didn't take the low. So there's no change still on the larger time frame. Monthly remains around the same area. Weekly, we're trading within the previous week. However, on the daily is where we see the detail of what happened. As you may remember, on Thursday we said on the briefing, well, the briefing from Friday, we said that the market was now within a short-term balancing range in these four overlapping days. And we also mentioned that there was a possibility of this excess high being a proper excess high. So what we had on Friday, I will get to the details in a second, but basically we had a huge break lower from that short-term balancing range, and we headed towards the low of the intermediate term range, closing the two gaps that were standing there. Now we are approaching. I mean, this move was very, 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 very strong, and now as we approach the low of the range, I think the odds are good that we will go through, and I will get to that in a second on the market profile, because here's the 4-day balancing range, and this is the excess we talked about, and we said this potential excess, and the focus for the morning was to assess value development relative to the afternoon range, which was marked by these two lines. So here's an important thing. When we opened on Friday morning, there was a huge drop late in the overnight, and let me bring the overnight into the picture. And this is important because you have a stacking of data points to the downside, but it was very difficult to see unless you had prepared your play, your game plan for the day before the price action, because the price action was very deceiving. So late in the evening session, we have this huge drop when China announced that they were imposing retaliatory tariffs on the US. So the market opens around here, and we have a Fed Chair Powell speaking shortly after the open at 9 a.m. when the B period opens. So, okay, so in the context of the fundamental trade thing, you have a change in fundamentals. Now China is imposing tariffs. This is not very positive for the trade talks that they are saying they will hold in the next few weeks. When Chair Powell takes the microphone, he goes and says he recognizes the risk, he recognizes the uncertainty from the trade war, and other Fed members said that they recognize it as well, but as long as it doesn't go through to the consumer, they don't think that cutting rates further is the right thing to do. So they need to look at other tools. The market doesn't drop, and this is the important thing. The difficult thing to see this morning is you have the China change. You have the Fed saying that they are not cutting rates, but the market doesn't break this range. In fact, the market probes outside Thursday's low and starts going back up, going back up, going back up. That's very confusing. And you can get very easily caught in the price action and start going long. Now, here's the way I analyzed this. As we said, the focus was on assessing developing value relative to the afternoon. So by default, opening here is change versus Thursday afternoon. The fact that you open the B period down here as well, you create double TPOs, you create acceptance below the MN low from Thursday. That confirms that something has changed in the market. The market bounced Thursday and accepted this area. Now you're accepting this area and you are technically saying there is change in the market. So if you remember that 4-day balance and range before that huge drop, let me see if we can see it. Well, the number gets on the way, but imagine this line is not there. If you start building acceptance in this bit over here, you're basically erasing the excess at the lower side of that range while the top excess is remaining in place. And that's very bearish. So going back, at this point in time, we have acceptance here, no excess at the low of the range, or very, very small excess at the low of the range, and selling excess at the top. That for me is very bearish. However, if you go short here or somewhere around this area, you run the risk of being whipsawed by the price action because you don't have a reference to rely on. And here's when it comes the trading opportunity on Friday. As you may remember, the overnight POC was very prominent, and we did mention, and it is at the highs of that afternoon range from Thursday. So we did say if we fail to revisit this area, that will expose market weakness. And guess what? That's exactly what happened. The market, I think the Fed rhetoric was not as negative as the market was like maybe expecting, or it had the bare minimum of positive points, that so the market didn't sell off. Now, when it starts going up, you still have the acceptance down here. So here's the important thing: when it went up and you flush into the Thursday afternoon range, you didn't reach the POC. And in fact, this looks small, but this was like 8 handles, 21, 7 handles. And C made that flush and went back all the way down below that MN low denoting change. So at that point, this is what you have. You have acceptance below the area denoting change, you have higher excess, you have no excess at the bottom, and now you were just rejecting this Thursday afternoon area without touching the POC. To me, that's very bearish. So obviously, the move was sparked by a series of tweets from the president, and that was the catalyst. But you could have taken a short position right there based on all those data points. And maybe without the catalyst, I think that there could have been a move down or at least a consolidation on the lower side. The catalyst triggered and this accelerated the way it did because everybody, a lot of participants were getting caught in the price action and they were buying, and they all had to bail at the same time. But I think it's a beautiful example of market analysis and how you can use the profile and the market generated data to position yourself. I think after C failed and actually D open right here below this level and leaving this little tail over here, this was a fantastic opportunity to go short and just monitor. And well, you had the catalyst and it could have moved you really quick into profit. Now, looking forward, we obviously broke that, closed the 2 gaps, started going lower, and towards the end, you had a final flush and a little bit of covering ahead of the weekend. Now, moving forward, I think the odds are pretty good that we continue lower because all of the references down there are weak. Remember that the low of this day, the 15th of August, has no excess. It's this yellow level. And that's within striking distance. That's within 10 handles of Friday's low. Also, Friday's low coincides with this level, which was already tested twice and then traded through, but is still obviously a reference because that's exactly where the market stopped on Friday. That's not a coincidence. That's a weak level. And then you have a couple of lows at 23.25 and 20.25, which, if you consider the magnitude, the width of this range, having these lows so close to each other uh, basically leaves no excess and is very questionable. So yeah, I think moving forward, this area over here, uh, 25, 20, all this is a low. If we start pushing a little bit further with acceptance around here, it's likely that we're going through. But again, anything can happen. This move was huge. There could be some a little pullback, healthy pullback. I don't know. You can see that the move was sustained through the session. So I would say focus for next week is on assessing continuation from this move. What would denote change? Well, I'd say that if you close this double distribution and you get back into above the, let's say, the 2900 area, that will denote change. In the absence of that, I think we continue lower, and the odds are good that we continue lower. As we always say, anything can happen because odds are just odds. Just keep monitoring the situation with the economic data and the trade talks.